Brad Thomas here with The Street, and I'm here today with Scott Peters with Healthcare Trust of America, ticker symbol HTA. Scott, good to see you.
Good to see you, and thank you for having me.
Sure. So you're here from all the way from Scottsdale, Arizona. So the healthcare sector today is on fire. I mean, we've got a lot of activity. It's driving the S&P 500 results and all-time high. What's driving healthcare today, Scott? And your industry just seems like a lot of growth in the sector. Tell us what's driving Healthcare Trust of America.
Well, for us, it certainly is all tied to the Affordable Care Act. We're a dedicated owner of medical office buildings. We want strong healthcare systems. We want to be on campus. And there's just strong fundamentals from a perspective of more insured folks, 30 to 40 million more people, and healthcare systems needing to dispose of assets. So from our perspective, we think there's great fundamentals in the healthcare sector.
So you mentioned on-campus. I mean, in terms of risk, how does an on-campus facility rank in terms of risk when you look at skilled nursing, and some of the other sectors? How do you rank?
Well, we think MOBs are first of all, the furthest away from any potential cuts from the government reimbursement programs or anything like that. We also think that doctors don't move. Healthcare systems have put significant dollars into their campuses. Medical office buildings on campus, very secure. We have retention of over 85% on a quarter basis over the last 3 or 4 quarters. Our occupancy is 91%. So we really like the security and the opportunity to generate that secure dividend from on-campus MOBs.
Sure. Now you've got a pretty broad or diverse makeup of tenants. Can you tell us a little bit about how your exposure today and how diversified the REIT is today?
Well, we're 74% on campus. We're 25% aligned, which means that there's a healthcare system that occupies the asset if it's off campus, greater than 50%. We've got great tenancy, meaning 57% of our annual rent income is credit rated, 40% in investment grade. That comes from the healthcare systems. So we love healthcare systems. We like to be on campus, and we're in 27 states and over 12.7 million square feet.
Sure. Now you started out, I believe, as a non-traded REIT, and then last year you listed as a public REIT. Can you tell us a little bit about the non-traded REIT? How you started that company and how you got it to where it is today?
Well, I started Healthcare Trust America in 2006. We were a sponsored vehicle like other non-traded REITs, but we did 2 or 3 things differently. We were the first non-traded REIT to become self-managed. We were the first to cut fees from a sponsor, and we also were the first really to list our shares on the New York Stock Exchange without raising any equity or any pink slips for 60 days. We're low leveraged, we're an investment grade vehicle, so we were very fortunate. We became public June of last year, and now we're 3 quarters into it, and we're very happy with our ability to get the attention from the institutional folks that are looking to make investments into a company like ours.
Good. Well, how are you managing your capital in terms of your growth today? And I believe you've got a BBB minus investment grade. Tell us a little bit about your capital composition.
Well, first, as I mentioned, we're low leveraged. We're about 33% leveraged. Investment grade balance sheet. We just recently did a 10-year bond, our initial issuance at 3.7, successful bond offering. We like low leverage. We like to tie our acquisitions to raising capital at the appropriate valuations and tying it to the appropriate debt. So we're a very, very secure balance sheet with a very secure dividend and income stream.
Sure. Now you've been, I believe, managing or increasing more management within your portfolio, where you have internal management now. So you've gone into other markets now to manage your own properties. Is that correct? We have 80% of our assets are 12.7 million square feet managed in-house, both property management and leasing. We think it's important to touch the tenants, to touch the physician groups, to have relationships with the healthcare systems, for our leasing folks to know the dynamics and understand the market. Real estate's all local, whether it's on campus on a healthcare system or whether it's across the street from a healthcare system. We want to be able to deliver great service, cost effective for our tenants, and have relationships that are long lasting.